this next topic, which is trending this week, which is Ray Dalio talking specifically about how do you know when a currency is collapsing?
Indicators of when a fiat currency is going to decline into, collapse is when those who are holding its debt sell the debt, and the government, central bank, has to print money to buy that debt in large size while that's going down.
So 16, 17.
Those are the most important indicators. So that you can see it, again, I want to repeat, selling the debt so that there's a big supply-demand imbalance, and the central bank having to come in there and buy the debt that no one else will buy in large quantity, so that then there's a currency devaluation. You have those three things aligned, the currency devaluation going down at the same time as those other two things are happening. And that's been a classic. It's like a bank run. They come to the bank, there's not enough money in the bank, and so they have to make up the difference by the printing of money.
Yeah.
Yeah, dude.
And so I did a Google search after watching that, and we're coming to you from Investopedia. 5 foreign countries that own the most U.S. debt.
Mm-hmm.
So coming in at number 1.
Drum roll.
Japan. Japan held $1.15 trillion in treasury securities as of January 2024. Number 2, China. China gets a lot of attention for holding big chunks of U.S. government's debt, given that its economy expanded rapidly in the last decades. Perhaps shouldn't come as a surprise. China takes the second spot behind Japan among foreign holders of U.S. debt at $797.7 billion in treasuries. The United Kingdom. So British investors hold $753.5 billion of U.S. debts as of January 2024. Luxembourg, number 4, is the 4th largest holder of the debt, and it looks like they are holding $376.5 billion in U.S. treasuries. And then coming in at number 5 is U.S.'s neighbor to the north, Canada, which holds $339.8 billion in U.S. debt. So kind of looking at the previous chart that we talked about, loss of a reserve currency, why would these countries own so much of the U.S. currency?
Well,
because it's the best currency in a bad neighborhood, right? For post-World War II, the United States was the strongest currency and economy. And in the middle of all that, we backed off of the gold-backed currency via Bretton Woods. For a long time, all settlement of crude oil, which I would be considered probably one of the most precious resources or assets out there, was settled in US dollars. For the first time, I believe it was last year, and I can't remember the exact country, but a country decided to settle in non-US dollars. They were trying to break away from that, hence BRICS being formed and all that good stuff. And so we are seeing that countries do not like to be attached to the United States. So that is a con for us. If we are printing copious amounts of money, we have no one to sell it to.
Right.
The benefit to us as entrepreneurs and capitalists in this country is we are moving back to a time more similar to World War II, pre-World War II, where the United States did not participate in the greater economy, right?
Now, are we moving there because that's actually going to be the only way to survive? Or?
Yes. And I also just think that it's out of necessity. Like post-World War II, Europe was in shambles. And so they needed somebody, in order to rebuild, you have to be able to produce and create an economy where you sell things, et cetera, and sell them to someone. So we became a consumer economy. We're moving away from that. We're now a net producer of oil and gas. We're bringing manufacturing stateside. It is now cheaper to actually manufacture in Mexico than it is to manufacture in China. And so it's kind of just very telling for where we're going is these countries kind of unwind themselves for us, and the United States becomes a net producer. And effectively, if you guys haven't read Peter Zion's book, I cannot tell you enough about it, but we have more navigable waterways, more farmland, more oil and gas than any other country in the world. And so effectively, we don't need to participate if we don't want to. And so it'll be rocky as we unwind because we're in the 4th quarter of this 100-year cycle and the end of this big cycle, as Ray Dalio would call it.
So for the entrepreneur out there does it go back to your previous point about diversification as we are in this phase, as we're looking at that end of the cycle?
Yeah, I think it, yes and no. I think that it's no surprise that we're seeing increases in taxes, right? Because as the government runs out of ways, they have a couple levers, interest rates and printing money. And so when they can't do that anymore, they just start to increase taxes. They couldn't increase taxes enough to overcome $1 trillion of debt a quarter. So the question becomes, why are we still paying taxes, right? The pro to that is there's still 5,800 pages in the tax code, of which 30 are only dedicated to paying taxes. So there's still a benefit to being an entrepreneur. But yes, you should be diversifying. So if you're young in the game at the moment, or at least mid-career, like don't keep all your eggs in that basket. Please keep expanding outside of it. But I don't know if I have the perfect answer for what you're trying to get at, but
yeah, mostly I'm just thinking about I'm thinking about the entrepreneurs who maybe have a tendency to just, like you said, focus on just the business, and there's this bigger picture happening that has a potential to be a tsunami, a negative tsunami on the business.
Right.
And so I think mostly I was just getting at that. And even as we segue to our next point, stuff like this next topic about like Bitcoin, as we talk about when we pose the question, should businesses be putting Bitcoin on the balance sheet? Following Michael say,
Yeah. Well, I think that is, if you have a currency that's losing its value, de-dollarization globally, which isn't entirely true, but just people are less attracted to the dollar than they used to be. It kind of starts to beg the question is like, what is our dollar actually worth? Mm. And if it's a dollar backed by nothing, how do we unwind from $1 trillion of debt according? How do we unwind excessive asset prices, inflation, and now high interest rates? Prices haven't really adjusted to accommodate that. So how do we unwind it? Mm-hmm. I don't know. Is the answer a currency reset? Maybe, maybe not. Is it moving to a CBDC and removing so much physical dollars out of the supply? I don't actually know. I just know that it might be a good idea to consider some alternatives.